Brace yourselves, we're about to have a repeat of 2021's crypto winter. Earlier this week, the crypto market once again sparked fear, uncertainty, and doubt about cryptocurrency with another $100 million in liquidations, 76% of which were long positions. No one knows what is going on, but it's definitely the return of the bears. Peter Brent said so. Since it's useful to get some consensus from the experts about the current situation, the fresh outlook on Bitcoin's price provided by the expert trader Peter Brent is worth paying attention to, and of course he's been operating in financial markets since the 1970s. Brent recently reveals what he identifies as an inverted expanded triangle pattern on the price chart of the major cryptocurrency. This pattern is also known as the megaphone, and it suggests a test of its lower boundary at around 46,000 per Bitcoin. For example, since Bitcoin is currently trading at 55,000, another 17% drop is possible if this pattern plays out. However, Brent also touched on the bullish theme in his prediction. According to him, the price of Bitcoin needs a massive push to new all-time highs to get back on track for a bullish rally. This means that until it touches the $74,000 per Bitcoin mark, nothing will be granted to those who remain on the buying side. And when we say all-time highs, we're talking about a 32% upside before the tables turn for the bulls. That's double the target for Brent's megaphone pattern. Peter Brent concluded his prediction by saying that the selling is stronger than the buying in this pattern. How strong is it? Not too sure. Nonetheless, it is interesting to find out that Peter Brent, alongside two other experts in the markets, Michael Saylor and Peter Schiff, were frequently mentioned in the updates for this week, so let's find out what this trio was up to. The popular Bitcoin bull, Michael Saylor, shared the successes of MicroStrategy's cryptocurrency strategy on CNBC. As the price of Bitcoin has risen an average of 44% per year over the last few years, MicroStrategy, which is among the largest holders of the cryptocurrency, has capitalized on this growth. The good news was worth sharing since it attracted a lot of positive attention, but not everyone thinks so, especially critics like Peter Schiff. Peter Schiff has been very vocal about his opposition to cryptocurrency, hence the attack on Saylor's post. Schiff pointed out that even though MicroStrategy has done well this year, its stock is still 40% below its highest price over the past 52 weeks and 6% below its 2021 peak. He thinks that the growth Saylor is happy with might not last, and that there could be more declines to come. As a matter of fact, he tweeted on X, "What a bunch of nonsense. CNBC is too beholden to his crypto advertisers to push back against your false statements. MSTR is down 40% from its 52-week high and is 6% below its 2021 high. The actual returns are not nearly as rosy as you describe and will soon get worse." In addition, Bitcoin's price plunged by more than 10% when Michael Saylor posted a bizarre picture of him riding a Bitcoin surfboard in a business suit. What was that supposed to mean? Of course, it was a way to celebrate the gem that Bitcoin is. So on Thursday, Peter Schiff jumped on his matter again by mocking his bizarre AI-generated picture. He argued that Bitcoin wave had already broken, further urging Saylor to catch the Bitcoin wave, which was the process of swelling. Before he said that Schiff had slammed Bitcoin ETF investors for betting on the wrong horse. He pointed to the fact that these products were only up 17% despite massive inflows. For comparison, gold ETFs are up by more than 24%. And just in case you don't know, this Peter Schiff is a gold bug who has a terrible track record when it comes to Bitcoin. He has been bearish on the largest cryptocurrency since 2011. And then there was a clash between both Peters, Peter Brent and Peter Schiff. Both of them argued over the Bitcoin gold debate. It started with Schiff pointing to Bitcoin's ETF's weak performance, according to the financial expert, which gains under 10% since its launch. Gold, on the other hand, is up 24%. On September 6, he tweeted, "As of today's close, Bitcoin ETF gains since launch have been reduced to just under 10%, while gold is still up 24%. Therefore, investors made 140% greater returns by buying #gold instead of #Bitcoin." Brent would reply, looking at the gold-Bitcoin debate with a long-term perspective. Being a good chartist, he shared a chart where a head and shoulders pattern was forming, favoring Bitcoin rather than gold futures. "Peter, your comments need to be put in the perspective of a long-term chart. The Bitcoin to GCF ratio could dip into high teens, but a massive continuation of inverted HNS is forming, favoring Bitcoin," he said. Well, that was the last we heard about the debate, but who knows what might happen next week. However, we can say that Brent has charts as weapons, while Schiff is just an intelligent critic. Furthermore, there are more key updates to note. The US economy has been in a slouched position for a while now, yet Janet Yellen, the Treasury Secretary, has recently expressed her faith in its recovery, emphasizing that the recent cooling jobs data indicate a soft landing as opposed to an approaching recession. She made it clear that there is not any large layoffs occurring and the economy is deeply into a recovery. But for cryptocurrencies like Bitcoin and others, this poses a critical question. Will the strengthening of the US influence Bitcoin's performance, or might it cause people to pay less attention to alternative assets like Bitcoin? Well, the point is that Bitcoin might see a comeback if Yellen's bullish forecast proves to be overly optimistic and if inflationary pressures reappear or the economy contracts. Now, this is just on a lighter note. Did you know that the centibillionaire Michael Dell recently caused a fresh wave of excitement within the Bitcoin community with his latest social media post? Dell jokingly told a social media user to enjoy Bitcoin after the latter claimed that his wife wanted a more ambiguous relationship because she had such big ears. Interestingly, this came after the tech mogul urged his followers to be curious, keep learning, and have big ears to listen while being open to ambiguity. The Bitcoiners desperately want to know whether Dell Bitcoin's post meant more than just mere curiosity. "Are you stacking, sir?" one user asked. Well, it might just be a joke, given that he's notorious for such posts. As a matter of fact, in July he called Bitcoin fascinating, and he also posted a hilarious picture of Cookie Monster munching on Bitcoin. Also, the centibillionaire had once included Bitcoin in his poll of the most important things, and it ended up being in the first place after racing ahead of AI and other options. Dell became a trailblazer by opening the door to Bitcoin payments back in 2014. Now, it remains to be seen whether Dell decides to embrace the largest cryptocurrency once again. Moving on, it seems like the Fed has raised heads once again. In a significant development, Federal Reserve Governor Christopher Waller has backed a potential interest rate cut at the upcoming September meeting. According to the CNBC, he backed an interest rate cut at the central bank's upcoming policy meeting in less than 2 weeks. Waller echoed Fed Chair Jerome Powell's statement from late August that the time has come for monetary policy adjustment, yet he did not specify the pace and magnitude of the cuts. Other policymakers have recently urged for policy easing, but this is just one of the signals that it might occur on September 17th through 18th at the Federal Open Market Committee meeting. Yes, now let's talk about some altcoins. Ethereum is currently displaying warning indications of a possible local price reversal as a troubling candlestick pattern has developed. This reversal pattern indicates that a decline may be on the horizon. It works this way. When purchasing power sharply declines, the candlestick structure typically appears, suggesting that Ethereum's bullish momentum may be losing steam. Now, the graph shows that before giving in to selling pressure, Ethereum recently struggled to break through significant resistance levels, especially around the $2,500 mark. Ethereum looks susceptible to a retracement as fewer buyers seem to be supporting current price levels. The general attitude of the market is still hazy, with a lot of traders taking a cautious stance because of macroeconomic issues and possible changes in investor sentiment. Next, we move on to Solana. The recent on-chain data indicates that Solana whales, who are frequently seen as a major force behind price momentum, appear to be backing out, losing their bullish outlook. Based on what the market has demonstrated, Solana whales lack long-term confidence as they quickly sell their holdings whenever the price reaches local highs. This selling activity implies that not even significant holders are inclined to wager on long-term gains in Solana prices. The fact that SOL is unable to sustain any upward momentum is supported by this price chart. Now, there is a good side though. According to data provided by cryptocurrency analytics platform Artemis, Solana is crushing Cardano in terms of user adoption. It has 126 times as many daily active addresses as Cardano. This happened even though these chains were once pitched as equally competitive quote-unquote Ethereum killers. On this past Sunday, Solana recorded 4.6 million daily active addresses, and Cardano pales in comparison to Solana with an infinitesimal 31,700 addresses. Solana is also way ahead of Cardano in other metrics. It managed to generate 35 million transactions compared to Cardano's measly 53,400. In addition, Cardano is lagging in terms of total value locked and DEX trading volume. Unfortunately, it seems that Cardano has been losing steam for a while now, regardless of the founder's game-changing plans, impressive monthly reports, and the Chain hard fork hype. On the other hand, XRP could be on the verge of a huge squeeze against Bitcoin and other cryptocurrencies. For most cryptocurrencies, green now looks grim. Nonetheless, click on the subscribe and bell buttons to get more updates, and we'll see you again real soon.